This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Welcome back. This week there are 2,387 homes scheduled to be auctioned in Australia, and that's up 9% when compared to the same week last year. New South Wales will host 880 auctions, with about 115 of them in regional areas. Victoria will hold 1,054 auctions, with virtually all of them in Melbourne. Queensland will host 243 auctions, with about half of them in regional areas. South Australia will hold 127 auctions, with most of them in Adelaide. Western Australia, Tasmania and the Northern Territory will hold 21 auctions between them, and the ACT will hold 62 auctions. Taking a look at the most viewed properties going to auction this weekend, and in New South Wales, the top property is number 4, 234 Old Northern Road, Castle Hill. This 4-bedder townhouse has a price guide of $980,000. In Victoria, the top property is 5 Lions Rise, Eltham. This large 4-bedroom home is about 20 kilometres northeast of the Melbourne CBD, has a price guide of $1 to $1.15 million. The top property in Queensland is 20 Faversham Street, Woolloongabba. This 3-bedroom home is within walking distance of the Gabba Sports Stadium in Brisbane. Top property in South Australia is located at 7 Kellett Street, Semaphore Park. This 4-bedder has a price guide of about $965,000. And the top property in Canberra is 13 Garra Place, Amaroo. This 3-bedder is surrounded by walking tracks and has a price guide of about $840,000. And the most viewed property on the REA Group website this week is an apartment with an asking price of just $250,000. So what do you get for that? Well, the address is number 20150 Alfred Street, Manunda, which is a suburb in Cairns in far north Queensland. It comes with 2 bedrooms, 1 bathroom and a car space. The online ad doesn't have too much detail, but it says the apartment is on the top floor, which is strategic high ground. There are tiles in all the rooms, rendered walls, a ceramic hot plate and a huge balcony with a commanding view over what the ad says is a battlefield. There's also artwork in the car park, apparently, in brackets graffiti. A previous version of the ad described the property as a war zone bunker, and it obviously went viral online, and also said you wouldn't want to live there yourself, but the return on investment is good. So it's rented out at $460 a week. So that is the top property. It obviously went viral. For more on the property market, I caught up with Paul Ryan from REA Group just a little bit earlier.
We've got almost 2,400 auctions scheduled this weekend. In Melbourne, it's a super Saturday. We've got 1,000 auctions scheduled this weekend. It's the busiest we've seen since April, and to still be in winter and seeing this kind of volume is really positive for the market.
What is a super Saturday?
That's where we have 1,000 auctions scheduled.
And how often does that happen?
So it happens a few times throughout the year, but I think this is the earliest this has happened leading into spring than we've seen for some time.
Yeah, what's really got the market picking up so much?
I think it's this persistent positive news. We've had home price growth all this year. Auction clearance rates are really strong, above 65% in Sydney and Melbourne last week. Buyer sentiment is just coming back, and sellers have recognised that.
Last week of winter, so once we get into spring, what are we expecting?
Well, numbers so far are that we're expecting continued price growth. We're seeing strong volumes coming back into the market. At the same time, we're starting to see maybe some financial stress emerging for homeowners. We're seeing still higher rates of investors selling properties. We're seeing higher rates of loss-making sales, so sales that are below the price that sellers bought them for originally. So this may be signalling that interest rates are biting a little bit, but it's probably a bit too early to say. All the indicators are still really positive.
Yeah, I think we've seen some data from the banks saying loan delinquencies are still at really, really low levels. But do you think there is a bit of an expectation there that as rates remain at these elevated period of time, we could start to see more stress coming into the market?
That's the expectation. So it will take some time for that stress to turn into loan arrears, which is where people are behind on making mortgage repayments. So that's why we're so focused on whatever kind of forward indicators we can get of that. So far, all the official measures of stress are well below even pre-pandemic levels.
And you mentioned investors. So say you own an investment property, that's the first one that you would obviously sell before your own property, right?
That's why we look at investors as a bellwether, because investors are more able to sell. People are less likely to sell the home they live in. If it's an extra property and people are struggling with a couple of mortgages, it's the investment one that inevitably goes first.
We've had some big property announcements from National Cabinet wanting to increase supply of homes across Australia. How's the industry responding to this?
Really positively. We've had a really good response from developers saying we love these ambitious targets for new home development, and we love that there's incentives for state governments to deliver more homes. We convened a workshop with people from all parts of the housing market, tenants unions, property developers, as well as property managers, and we had similar ideas at National Cabinet. So things around no grounds evictions, that's really good. Tenants need security of tenure, and also about where can we get more development moving. And part of the output of that report was going a bit further on not only just building new homes, but how can we use the homes and land that we already have more effectively? So things like incentivising downsizing with removing stamp duty, maybe moving towards land tax, things that New South Wales and the ACT have kind of started to move towards that maybe we need a national conversation on.
Yeah, and I've been reading great features in newspapers recently about how small towns, holiday towns, are now having a lot of their properties taken up with short-term accommodation, and people are struggling to find leases and long-term rents. So is boosting supply the easiest way to get through that problem as well?
I think so. If we build more homes, then more people can holiday there and more people can live there. It's a win-win. In the short term, though, I think it's really tough for those communities seeing these homes taken up by short-term leases when local residents can't find a home.
But if you were the landlord, it obviously makes sense to lease it short-term because you can just get so much more money.
Yeah. And if we look at where households are spending money at the moment, there's a lot of pent-up demand for travel and experiences that people couldn't have throughout the pandemic. So that's putting additional demand pressure on that side.
Looking at Australia's economy, it's now feeling like we could avoid a recession, just the way things are going. So what does that mean for looking towards next year for the property market?
Yeah, I think that's we're kind of getting towards that soft landing that people have been talking about, which I think is unambiguously positive for the housing market. I think the uncertainty was one of the things that was holding back the property market late last year or early this year in terms of seller confidence, definitely. Now I think sellers are coming back to the market as people have more confidence that they're going to have their job, that there's going to be kind of the economy is performing well. I mean, we're still seeing really low unemployment rates. We're looking like we're achieving a really good result for the Australian economy.
And clearance rates, how have they been holding up over the past few weeks with all this additional stock out there?
Really well, actually. We saw clearance rates of around 65% last weekend in Sydney and Melbourne, and it's been holding above 60% for several weeks. That's really strong results as volumes have increased from kind of the lows throughout winter.
Paul Ryan from REA Group, thanks so much for your time.
Thank you very much.